Hello, everyone. How you all doing today? Good afternoon. All right, we'll just wait for a few more minutes for people to pile in, and then we'll get this party started. Hey, Jeff, how you doing today, sir? It's good to see you as always. What kind of crazy shenanigans have been going on your side of the world? Go ahead, we'll migrate over to the charts in preparation for today. I'm doing pretty good. Was quite an interesting week last week with everything that happened with crypto. I was expecting us to start getting a drop mid last week. I really thought we'd see more activity between the bank reports as well as the economic data, and really not a lot happened. So I guess this might be the week where we start seeing the craziness. I don't know if it's going to be an up or a down week. I've looked a little bit at the charts, but I haven't really done a full analysis. I was waiting for this to kind of see where I think the week may turn out. It's funny. I think YouTube broke, so I actually don't know how many people are in the stream right now, which is not necessarily a bad thing. It might just be you and me. So you have me all to yourself. Very possibly, this could be one-on-one coaching for you today, Jeff. But let's get the party started. All right. So obviously we've had a bit of a crazy day today. Bitcoin has dropped about 3% thus far, and it's been a kind of an odd day because Ethereum has not really gone down at all. Like, it's gone down, but nowhere close to Bitcoin. This is like exactly how I was seeing things for the last couple months, but in the opposite direction. So when Bitcoin would spike up, Ethereum would lag behind and the alts would lag behind. Now I'm seeing it in the reverse, where Bitcoin is dropping, Ethereum's lagging, and the alts are kind of all over the place, but a lot of them are still lagging behind BTC, or about on par with it. Not what you would expect normally from alts. So the first thing I like to look at is the general indicators. So we'll look at the dominances and things like that. And I thought I'd fix this morning, but apparently not. There we go. Okay, so based on the last few days, Bitcoin dominance has taken a nosedive basically since Wednesday of last week. It's gone from 49 now down to 46%, and it doesn't look like it's stopping anytime soon. However, on the flip side, we're not seeing an equivalent increase in alts. So the money's not moving out of Bitcoin into alts. Some of it is, obviously. We've gone up from about 380 billion to about 400 billion here. But yeah, it's looking like money's actually being taken out of the market right now. That's kind of what I'm seeing. So with that in mind, that could be very bearish for the markets this upcoming week. USDT dominance is going up as well, which means that even though this number has gotten higher, more of it's going into stablecoin than just necessarily alts. So it's going to have to be something to watch. But if this Bitcoin dominance keeps dropping, if we get back down to, say, the EMAs down here, down to about 45%, Assuming the one of two things are going to happen. Either the alts are going to explode upwards, which, I've seen some social media calling for alt season should be upon us and stuff like that, which could happen, I guess. I mean, I can't rule it out. The markets have been so weird the last few months. But at the same time, I'm not seeing that amount of money flowing in that I would be expecting that. It's a tough call, but if it does drop, we're either going to see the alts explode up or they're going to absolutely tank. And we might be getting to that stage where this rally we've had for the last 3 or 4 months kind of has hit its max momentum. And now we're going to start seeing the rug get pulled from underneath us, and all the bulls are suddenly going to have a really, really bad time. But it's too early to say for sure. It really could go either way. Just based on this alone, I would watch this very, very closely this week. If we continue to see the Bitcoin dominance dropping, but we don't see the increase in the alt market, then that's a real cause for concern. Like, basically, we can see from here, Bitcoin's been dropping. Let's zoom in on this. Basically, since, I guess, about 8 a.m. yesterday, or maybe a little bit later, so say around noon yesterday, Bitcoin dominance has been decreasing consistently, but the alt market's dropping at the same pace. So that right there is just money exiting the market. Not even into stables. That's just, it's gone. So we'll have to see how it plays out. Let's take a look at the actual charts and see if we can figure out what is going on here. All right, so if we look at the daily, we still have the bullish trend on the daily in play. We had our W down here. This happened just after the FTX crash and in December. Then we had our rise level 1 in January. That was that massive bullish thing that suddenly had everyone take notice that Bitcoin existed again. We had some sideways action for a bit. Then we had to drop down right at the banking crisis. Then, and almost immediately shortly after, we had our next massive rise, which very much was likely part of the huge amounts of liquidity and risk-free play that the bank suddenly had access to, with all the recovery measures that were put in place to help prevent any more banks from going insolvent. And then since then, we've just kind of dicked around. So we've been kind of going sideways. We've had a slight rise here, but this is not enough, in my opinion, to call it a rise level 3 on the daily. So as of right now, I feel this is just a step up of this consolidation. So like basically they basically had a boardroom here. They just fuck it, we'll just do it like this. We're gonna make it nice and messy today. So they just basically did the consolidation for a few weeks. Then they decided, you know what, we want to be a level higher. And they're probably going to continue to consolidate here. But they could break out, but they could just consolidate in this range for a while before they make their next major move. And the main reason why they may want to do that is simply because of the fact that they're not getting the volume that they've been wanting. They're not getting commitment from traders. And as far as a market maker is concerned, at the end of the day, it's not how you place your trade, it's the fact that you placed a trade. That's all they care about, because it doesn't matter which way you go, if you don't play your cards right, they will still take your money. So this tells me, usually when you see a step like this, usually they're trying to do one of two things. They are trying to encourage people to think price is going to go in the direction that lines up with the way that they move price. So this might be getting bulls to commit more money, because price is now up and we've gone from 27,000 up to like 29,000, which obviously with 30K being a very much sentimental level, that's the way a lot of people have been. In addition to that, you've got the the bears, who now have seen this move up, but now it looks like we're hitting resistance. Right? Like you're just seeing this constant whack away at a support line. And I bet if you look far enough back, like I'd have to go back like a year or so at this point, but if you look far enough back, I bet you could find a resistance point right around here as well. So you can have a lot of reversal traders thinking this is a good time to get in, you know, place our shorts up here or our stops up here, and we're expecting the market to go down. Now, either side could be right. But as I said, this is just how the market maker likes to play the game. All he cares about is at this point, you can see volume was just getting to nothing. Right? Volume was just drastically dropping on the daily. So they push price up, and they use very minimal volume to do it, which makes me think that this is a very suspect maneuver. They just wanted to move price, so retail got excited. And volume has now spiked up again a little bit. So all they're doing is trying to keep momentum going, getting people, and it doesn't matter which direction they go. If they have more people putting in longs, they'll wick down, they'll take out the longs, and then maybe they move up more to then take out the shorts, or they can just come up, take up the shorts, then they come down and take out the longs. There's plenty of ways they can do this, but that's just how they operate. So when I look at this, let's remove all that. So when I look at this, what this tells me right now is that it is a very dangerous time, at least on the daily time frame, to try to predict what's going to happen with this market. Because the market maker method is very much a reversal strategy, it looks like to me that on the daily, we should be expecting at least one more major push up at some point. That doesn't have to be today, that doesn't have to be tomorrow. It could be the summer again, for all we know. I mean, basically, this was March, so this was a month ago when we had our last major push up. And then from there, it was 2 months before, like we had this happen in January, then it took 2 months before we had our second push up. So we could have another 2 months before we have our third push up. Now, what we're going to be looking for is pricing to move one of two ways. We could either just at some point, price is going to stay flat. It's going to let the EMAs come back up, similar to what it did here. Right? Like the EMAs were so far behind, so it just consolidated for a long time until it got to right about where pricing was. Then they took out the longs before they actually went in the direction everyone wanted to go. And then you had all these people who got stopped out whining and bitching about the fact, the whole, oh, I was so right with my trade, but then, you know, I got stopped out before it actually went the way I wanted to. You know, that's a very standard maneuver. So we could be waiting for this EMA to come up, and then they'll turn around and then they'll do their last spike up. Alternatively, they could also bring price down swiftly and actually meet the EMA and then do another fast move up, whether it goes up into this 32 to 34 area, which I don't have marked out because I keep removing my indicators. But this has been a very solid area for a potential reversal I've been watching for a long time. If we break past this, there's a lot of upward momentum. It actually becomes a lot more bullish. But we have to push through this area. Whether or not we do is a whole other story. So we could see in a month or two, price just slowly trickles down, could trickle down basically anywhere into this area down here. And then we'll have our third level rise. And then once we have that third rise, that's when we officially start looking for shorts. It may or may not reverse, but that's when we at least start really looking for it. But that's on the daily time frame. If we look at the 4 hour, we are now looking somewhere along the lines of we had a really weak W here, and then we had our first rise, and then we've had a second rise here. I'm not even sure. Yeah, because It is possible. It very, very, I'm not too sure about this one. This looks very suspect. That could be a rise as well. So we could have had already 3 rises on the 4-hour, but I think this one's kind of pushing it. I think we've only had the 2. And if that's the case, even if it's been 3, we still could be looking at one more rise. We haven't really had a proper reversal as of yet. Alternatively, we could have an M here, and this could be the start of drop level 1. So with that in mind, we'll remove all that again because it's getting awfully freaking cluttered. One of 2 things are going to happen. If this continues, whacks at the 200 EMA, then comes back up and retests the 50, and it stays underneath the 50. That is actually very bearish, and that would potentially indicate we've already had our 3 rises, that suspect lift up I was talking about was rise 2, in which case then we're looking for 2 more big downward moves on the 4-hour. So we could see price come all the way back down to about 28K before we move back up and we test the EMA. However, if this is kind of as far as we go, like let's just say we dick around here for a little while and we go back above the EMA, the 50 EMA, that moves us back into bullish territory. Not necessarily like a massive spike. We might not go all the way up here, but if we come back and just kind of lazily come across the 50 EMA again, that means that this was a fake move down, which is also possible because it's considering it's Monday, and we're actually going to be expecting more upward momentum. Because this is on the 4-hour, likely we'll see this play out over the course of this week, whichever way it's going to go. So what I'd be looking for here, if I was going to be looking for an entry, I'd be looking for price to get down to around at least 28.5. Or alternatively, get to about 30K again. But it would have to clearly be over the 50 EMA. Like if it just kind of dicks around the 50 EMA, then it could really go in either direction. If we go down to the 1-hour, this one seems a little bit more telling to me. So the 1-hour, we clearly looked like we had our M over here last week. And it was a very long M. Normally you don't expect 1-hour M's to take a whole week to be created. But again, because we've had such volume issues, the market maker is having to drag things along just to get enough accumulation for them to do what they want. So we had our M formation. Then we had drop level 1 here. Then we dicked around the EMA. See, this is what I'm saying about just dicking around the EMA for an extended period of time. You wouldn't go super bullish just because we went back above it. You have to wait for it to really clear it. Like if it had come back up to, say, here, not even in strength, but just it just trickled its way back up, that would be more bullish to me. But in any case, we had our drop down. Then we consolidated for the entire weekend. Then at the start of the new week, we've had, this looks like it's drop level 2. This one is also kind of iffy. Technically, this did not close with enough volume. I do that all the time with the trying. Let's get this. All right. It's arguable because I mean, when you look at this, it doesn't look like it closed with volume because it's not like a purple candle. But when you look at the actual volume chart, it's significantly higher than a lot of other candles. So it could potentially be drop 2 here, and then we consolidated for a while, and then we had drop 3. And if this was drop 3, then we'd be looking for potential reversals at this point. This is where we'd start looking for W's or 3 hits to the low or something along those lines. It does basically line up with the bottom of this vector, so that could be a natural exit point for pricing here. So in other words, to make sure it's incredibly clear to you, right now we could be looking at more downward momentum, upward momentum, or the price might move sideways for a while. It'll be one of those three. I hope you're paying attention, Jeff. Now, what I would look at this point. So this is a zero trade opportunity because there's just too much conflicting information, and if there's no clear direction, then you have to be very, very careful with what you do. So what we're going to look at is we have to wait for the market maker to make the next move, whatever that's going to look like, and plan our strategy around that. So the first thing I'm going to do is I'm going to go to high block, and let's take a look at the heat maps. All right, we'll stay on the lower heat maps for now because we're going to be looking to see how they're going to want to deal with the weekend volume. So we've just been kind of dicking around for quite some time at this point. And it looks like there are two places to potentially go for. Would be either to the 29.9 level area or to 30K. And 30K I was mentioning before did kind of look like a natural rebound to the 50 EMA. So what we'd be looking for is if, and this doesn't have to happen with volume. Ideally, you'd want to see that happen, but who knows? So if price trickles back up to the 50 EMA, and depending on how long it takes, it could either go to that 29.8 level, the 29.9 level that had the liquidity, or it could go all the way up to 30K, slightly go over the 50 EMA, and if it rejects there, like if it Kobos off of there, then we'd be looking for more downward momentum. So that is one potential spot we'd be looking to short. If we were going to look for downward action, the closest area that I can see here is I'm just going to refresh this. I want to get a slightly bigger view. So we'd be looking at possibly the 29K level as a potential reversal point. If not there, we'd be looking maybe at 28,375. So if we look on the chart, 29K basically puts us here, which is right at the bottom of this vector. So that actually would line up with another potential rejection point. So we'd be looking for a rejection possibly here. We'd be looking for a rejection around the 28.3 mark. Which is about here. And if basically we see price go up first and it rejects here, I could very much see us going all the way down to either this area or this area. This might actually be a really solid trade if it plays itself out, because we'd be looking at, depending on when we do our entries and stuff like that, we'd want our stop loss just above the peak of the last move. So it'd be just above this. And we'd be looking at somewhere between a 3.2R to a 6.8. That's walking around money. So if we see the move up to about 30K or to 28.9, something like that, we'd be looking for a potential reversal there. And if that happens, then it's going to be a pretty sizable move down for drop level 3. But once it gets to this point, we need to see some sort of you either have to take the chance and just assume that the short's going to work itself out, or you might want to look for a reversal pattern like another M or something like that. But ideally, what you're going to want to see, like, you're going to have to use some level of faith, but ideally what we want to see is a lovely high test, so, preferably with volume as well. So if we wind up getting a candle at some point in all of this that just is like a stop hunt candle, this is my grade A drawing skills. So basically at some point, if you see a high volume, high test happen right around this point, that would be, for me, the signal this is when I want to get into a short. And I'd probably do some staggered stuff because they might not be done taking out shorts. They'll likely want to keep these guys trapped. So, you know, if price gets all the way down to here, I might do an immediate entry here, might do another one, you know, close to the top of where the stop hunt ended, and then another one, you know, like this would be like my low ball type of entry. And then that would turn around and change my, you know, that, I don't know, the pricing normally would probably get me to about there, which might pull it up to about a 10R potential, if not more. But as I said, when you're trying to get in, because this will be the drop level 3, so it can sometimes be iffy. It might not go where we want it to. It could literally retest up here, and it might only come back down and bounce off 29.2 again. There's really no way to know. Drop level 3 gets kind of a little iffy, especially on the lower time frames. And we're not seeing bearishness on the higher scale time frames either. Like when I was talking about the 4 hour, if we come back up to 30K, which would potentially be a retest of the 50 on the 4 hour, which would be amazing. So there is bearish potential, but it's not a clear bearish signal. We actually have to see that retest before we know where to go from there. But if we do retest that and it does continue downwards, then we're looking, because this will only be drop level 2, we'd be expecting here, here, I don't know, that'd be a hell of a drop. But we could also wind up, if the 4 hour is really strong, by the time we're done, we could be finding ourselves in this area as well. But that would be probably after 3 full moves. So there's a lot of potential if you get in on this EMA and you manage to get in at the right time and your stop is wide enough to watch for any kind of crazy shenanigans and stuff like that. But unfortunately, because this is also Fake Move Monday, there is very much a possibility this entire thing is just to taunt us bears. It's just taking out longs right now, and tomorrow we're gonna wind up at some point getting a W formation or something like that. Then all of a sudden we're doing rise level 3 on everything. That is very possible as well. So as I said, taking that short is going to be a dice roll. I think I would at least make an attempt. It's possible, especially with how much the R multiple is. I might widen my stop more just to play it a little bit extra safe. I'd have to look at the order books at the time of entry and stuff like that to see if there's any kind of suspect stuff that I'd have to care about. Your ideal stop, you'd want, as I said, above this price action here, because this was the high point of the previous move. So they typically, the market maker typically will not go above that point if they're continuing a downward trajectory. If they do, that negates this drop. So that's just something to keep in mind. But that can sometimes happen, especially with news. I don't think there's anything crazy happening this week in the news stuff. Like there's a few economic data things coming out, but like there's unemployment on Thursday and PMIs on Friday. So I mean, there is news. I also think there's an SEC committee meeting tomorrow, and there's a congressional hearing of some sort, I think, on Wednesday. So I mean, it might not be something we're expecting. It might just be something that gets said or something that gets announced that affects things. So anything could happen. But yeah, as I said, it's a potentially really good trade opportunity. It's just one of those things where you're going to have to use a little bit of faith. If you really want to be safe, your best place to go would be above, well, it would be above the high of the weeks, but that's at 31K, 3160, which really is going to mess with your risk to reward. But since we're talking higher time frames, like, so if like I was to enter, no, here, we'd be talking that knocks it down to about a 1.5 R. There's people we know that would love a trade like that. This would be ultra super safe conservative trade as far as I'm concerned, assuming we reject at the 50. If it goes above the 50 and it just keeps going, then it's not worth trying to put in a short. But if you see a clear Kobo, this would be super ultra safe entry. And then, I mean, you could always stagger entries in up above to try to get that thing higher, but likely you're not going to see the price get higher unless we have like a weird event occur. The semi-conservative approach would be above the peak just before the drop here, which would be this area. So like, there-ish. That's an option too. And that gives a slightly better risk to reward. But I mean, that's looking at the 1 hour. If you're looking at the 4 hour, this might be one of those things you ride for a while. And if you're looking at that, we could wind up seeing, we get that retest, we wind up getting down to here as our first take profit level. Then it's likely going to trickle up because the 1 hour is going to be done, and it will trickle back up for a little bit, wind up retesting or just going above slightly the CMA again, and then it's going to do its drop level 3. But its drop level 3 can either go down like this, or it could just stop right here again too. So, but the higher time frame moves tend to be much bigger, and when you catch them early, they're way more rewarding. It just might be one of those things where you'd wait for the drop down initially to finish out the 1 hour time frames, you take some profit off the table, like you always protect your trades, and then you just have to ride it out, likely for a week, week and a half, see where prices go. That's always an option too. Do you have any questions, Jeff, before I continue, or anyone else who happens to be here right now? Now, if I look, I'll wait to see if Jeff responds. Let's take a look at the trading books. So the trading books are really thin right now. We are above the point of control. And the only real ceiling that we have right here is around 29.6. And there's some slight higher levels up to 29.8. So that is possible. That could be indicative of that move up that I was talking about earlier to retest the 50 EMA. Because that 50 EMA right now is at about 27.8, which, more or less lines up with this. If that was to happen, what I'd be looking for is if we started seeing a spike upwards, I'd be looking for these orders to get a lot larger, a lot faster. So if these order books suddenly fill up, price goes up, and they make this a very clear area of resistance to prevent the price from going higher, then that would be, to me, a very clear sign their next move is going to be to go down. They also have a very clear floor at 29K, which I had mentioned was, let's It's the only problem, which I had mentioned was the potential bottom for the 1 hour for a drop level 3. Like, so right around here, because that would be right at the bottom of this little vector here. So now that doesn't mean that's where they will stop. It just means that that's a natural stopping point. So if we have the 1 hour basically come down to about 29K, and then it bounces back off that, we're going to be expecting more upward action for at least a while. We'll likely see whatever move it's going to be is likely going to happen during Asia tonight. So, we'll know before the UK markets open, most likely. That's very clear. Glad you're seeing things properly so far. Excellent. If you do have questions, just feel free to ask, because obviously I am here to tell you anything you need to know. Okay, so moving away from the price action for the short term, because basically the markets right now, we have to wait. Either we're going to retest that 29.8 to 30K level, or we're going to go down and at least test 29. But we have to wait to see what the market maker does first before we decide to do anything. However, if we do go down to 29K, I would not be placing a long at that point in time. Like, if we just come down here and it bounces off there, it's not the best idea, because there is always the possibility that we might just come back up. Like, this might be just to take out longs, then they come up a little bit, take out the shorts, and then they do their move down. So this is very counter trend trading, and it's not enough of a risk reward ratio. Like, nowhere in my mind. Like, you'd have to get really lucky. It would be a hell of a dice roll. This is a much safer play, in my opinion, if it Kobos off the 50 EMA. But in any case, moving forward, so I mentioned this on the Discord. Apple has announced that they're getting into the finance business. They are partnering with Goldman Sachs, because obviously Apple is not a regulated financial institute, that they're going to start offering high yield savings accounts that offer 4.15% to, I'm assuming it's going to be Americans, since of who they're partnered with, which is a pretty sizable amount for a savings account. Considering that the US interest rate right now is, I think it's 5.25% off the top of my head, maybe 5.5. It's higher than 4 anyways. It's not the greatest yield a person could get right now, but for the average retail person who doesn't know much about finances, that's an amazing percentage. Whether or not it stays like that is a whole different story. The real thing about this is this gives me two very interesting thoughts. The first is this the first? Are we going to see like, we've seen companies get involved with finances before. Usually it's in the form of like a credit card. So like, you have like a Home Depot credit card, or, a Walmart credit card, things like that. Those have been pretty standard for a long time. This is the first time I've seen an actual business move into finances that wasn't running their own bank. So I'm curious if this is going to become more of a common thing, this is smart on Apple's part, because people will be thinking they're making shit tons of cash at 4.15%. But as I said, right now, we know bonds pay out approximately 5.25%. And possibly more if the Feds continue to increase interest rates, which means at a bare minimum, Apple and Goldman Sachs, depending on whatever their partnership agreement is, will be splitting a minimum of 1.1% yield on money people are depositing with them. So if, say, $5 billion of American money flows into these new accounts, they're going to be making 1% of that per year in additional revenue. That's just free money for Apple, because the funny thing about, like, they don't have to work to produce that money. That money is ironically coming from the US government, which in turn is coming from the American citizens. So basically, if I was an American citizen, but I mean, this is the way treasury bonds work with everyone, but if I was an American citizen, I'm basically paying, my taxes and all my fees and stuff like that to the American government, who's paying out 5.25% for people to lend it money. Now, I'm just paying money to the US government, and that money is being used to fund borrowing more cash. And then I'm giving what money I have left into Apple, who in turn is taking money from the US government and paying me some of my cash back. So, yeah, if you're going to do some math here, let's just say they only take, like, Apple's a big company, so I'm sure it's going to be significantly higher than this. But if we were to say Apple was to take in, let's just make it easy, and we say 10 billion in deposits, they're looking to stand just from the spread between what they're paying out and what the current bonds offer, $110 million a year. And that's if it's only $10 billion they collect. They could do way more than that. Apple's a huge ass company. And especially when you're factoring in, there's a lot of uncertainty in the markets right now. People may trust that Apple's probably not going to do any kind of deposit protection. They're just slapping their name on something that's already FDIC insured. But people will do it. Like, people do so much, like, Apple fans just do the most ridiculous things at times and spend the ridiculous amount of money. So there's nothing to say that they're not going to all move their funds over just because Apple's involved regardless. Also, just the Apple Card itself, I think, is offering something like a 2 or 3% cash back on various purchases and stuff. So when people are using Apple's debit and credit system, they're getting cash back as well. So basically, Apple's just like, we just want to control all your finances. And people will do it. So, but an extra $110 million, I realize at the end of the day, that is negligible for the finances of a company like Apple. But that's just the start. This is just them breaking into the financial sector. Next thing you know, you're going to have mortgages, and you're going to have personal loans, and you're going to have all sorts of things that Apple's going to be able to offer. And now they're in the banking system right as long as the tech sector. So I'm curious about that, see how it goes. The other thing that I thought might be interesting, and again, I don't know the partnership that Apple's going to have with Goldman Sachs on this, but here's the other thing, which I thought might be even more genius. Not just with that revenue, but as we know, most banks, especially the American ones, run on a fractional reserve system, which right now, no bank has to hold the deposits. They don't have to keep any cash reserves for deposits that they have. So there is the possibility, let's say Apple gets their $10 billion worth of deposits. They could take that $10 billion and theoretically, Goldman Sachs, in partnership with Apple, could have that money given to Apple as investment as an investment for expansion. Now, obviously, that's not free money to Apple, but it's free money that is debt-free, or not debt-free, but like interest-free. So Apple can use that money to fund research. They can use that money to fund expansion. They could use that money to do whatever they want. Obviously, that money is still owed back to people, but this could give Apple access to financing that other companies wouldn't have access to. And because basically they're making money off the people who deposit money with them, they're actually getting paid to use their depositors' cash for their own business interests. That is fucking genius. Like, could you imagine if you wanted to start a business and you went to your bank, and your bank said, yeah, not only will we give you $100,000, but if basically you don't pay us back in a year, we're going to give you an additional you're going to make an additional $10,000 off of it, and you don't owe us any interest on that money. So this could actually give them a very big piggy bank to play out of. So we'll have to see how it goes, but if that's kind of the mentality that's going in my mind, if that's actually what's going to happen, I could see a lot more companies doing this in the near future. The only scary thing about this is this moves us slightly closer towards the whole corporate overlord dystopia thing. Once you have the larger corporations also being the ones in charge of your cash, things get a little scary, but that's all tinfoil hat mode. All right, next piece of news. One of the U.S. congressmen in the U.S., I can't remember his full name. It is... Well, there it is, Warren Davidson. He is very pro-crypto. He's been very affluent about pushing the crypto agenda for a long time. He posted a tweet a couple days ago basically saying that Gary Gensler is abusing his role as SEC chairman and that he is basically sending America into a dark age with how he's trying to do things that he's doing. I'm paraphrasing here, but basically he's just saying that Gary is doing this shit all wrong. And that basically we should be embracing crypto and regulating it properly, not just, trying to destroy it. So he has threatened, he hasn't actually done it as of yet, but he says that he is going to be introducing legislation to have Gary Gensler removed as CEO of the SEC, which may or may not pass. We'll just have to see, because there's obviously a lot of congressmen who are also very much against crypto. So who knows what this is going to do, but at the very least, it could spark debate, which might be the most important part about this. It also might force Gary to have to back the fuck off a little bit if this becomes a more common thing. So there's really no way to spin this right now, whether it be bullish or bearish. It's just something to pay attention to. It might just be an idle threat. It might actually be introduced. It might actually get through committee and actually become something that gets voted on. Who knows? We'll just have to see how it all plays itself out. So beyond that, there hasn't been much news to report this week. So luckily, we're already an hour into the stuff. I do have a little bit more to talk about before I stop for today. But I didn't mention on the Discord that next week, Wednesday of next week, we are going to be starting, I'm going to be starting talking more about quantitative trading, which is the very fancy and makes it sound really cool way of saying bot trading, right? Like algorithmic trading. So algorithmic trading is something that I've done for a long time. I basically got into it when I got into crypto 6 years ago, so in 2017. And it is tough to break into because it sounds incredibly simple. But the problem is that it's very easy to put your faith in something that is just going to blow all your money on you, especially if you are a standard retail trader. So most people who do algorithmic trading wind up getting wrecked. And it's no different than just if you're trying to day trade or anything like that, because the bots do not have the ability. They just do what you tell them to do. So if you are a trader who can't perform your own manual trades and don't know how to properly do technical analysis, you're going to get screwed. But one of the things I've been working on the past 3 or 4 months, like even when I started, I got burnt when the 2017 bull market ended and we moved into crypto winter. Basically what wound up happening was things were going great, but I was standard retail trader. I wasn't taking profits. I was just compounding everything. I was basically putting more and more money in, like, and letting the money I was making compound into the investments. So I was making more money during that time, but I was just basically astronomically increasing my risk. And I also didn't know any technical analysis at the time. I literally had purchased a couple bots and was using some random YouTubers who were like, here's the settings that I use type of thing. And just copy and pasted that shit and let it run. And during a bull market, that shit works. But once you start shifting into a different trend, you're going to get destroyed no matter which direction it goes. And not having any technical analysis, I didn't know we were coming to the end of a bull market. Fuck, I didn't know what a bull market was. That's how noobish I was. And so I got destroyed. And that happens to a lot more people a lot more frequently than you'd think. So what I've been trying to focus on the last few months is I wanted to take my knowledge of quantitative trading and apply it to things that you guys can use based on your own trading skill. Because I mean, we've all been in trading groups together, successful or otherwise. We have some knowledge, we have some expertise. We might not always get things right, but we can kind of read the charts, like at a bare minimum, right? You kind of know what you're doing. So what I've been focused on is trying to come up with ways to be able to start teaching you guys how to implement bots to execute things that are probably going to be about 95 to 99% accurate in the grand scheme of things based on how you can analyze the markets. So if you're familiar with the market maker method and you're looking at reversals, you can come up with bots to do that. If you just want to invest and you're able to look at, support and resistance lines and trend lines and, general technical analysis, you can plan bots around that stuff too. And I'm not talking about fast trades. I'm talking about stuff where it's not necessarily set and forget, but they're bots that you can basically let run for a significant period of time. You just have to check up on them every few days. And it removes all the emotion out of the trading, and it also is very consistent and profiting. And I'm going to show you an example right now. So so next week, starting Wednesdays, I'm going to actually start running educational courses to teach all of you guys about this stuff. So every week I'll be teaching about new tools and new ways to use stuff. I don't know how long it's going to go on for. It'll depend on interest and how quickly everyone picks stuff up. We'll do Q&A, we'll do live analysis, all that sort of shit. But the whole goal of this will be for you guys to at least implement some bots into your trading style, especially in the confusing markets like this, that will make your life easier. So this is an example of what can work. So this one right here, I set this up last night. I set this up. This was Thursday. I have another one. I have a live one I set up last night. I'll show you that one in a little while. But the whole point of this is that this was an example. This is a grid bot. This is like the most simplistic bot that exists out there. And it's the easiest one for people to wrap their head around. Basically, you set up a bot. I'm going to switch over to my grid bot indicator. I'll just make it easier for you to see it without me having to draw all the stuff. So all it would be is you'd have your time frame, and you'd find a support line, you'd find a resistance line, and then everything in the middle here are grid lines. So what the grid lines are is that your bot is designed that every time price goes down below one of these lines, it buys a little bit of the coin that you're trading in. So it DCAs into that coin. Whenever it goes up, it sells a little bit of that coin. So if I was to say buy in here, right? If I started my bot here, when the price went up, it would be selling, then price comes back down, it buys, it sells again, it buys more, it sells again, it buys, etc., etc. So every time it crosses one of those lines, it's buying and selling. The power of the grid bots is the fact that you're making money on the volatility. So when you're buying here at, say, 3 cents on Zill, I don't know why my charts keep going back to Zill. I have no care about this coin. But anyways, so you're buying 3 cents and it goes up to 0 point, oh fuck, I can't even read now. 3.1 cents. There we go. It goes up to 3.1 cents. So it has now sold a very minor part. Like this is 25 grid line. So it'd be selling a 25th of your entire position once, twice. So it sells 2/25 of your position, which may not be a ton of money, but you may turn around and make, say 0.4% on your entire position on that sale. So like if you had put in, say, $1,000 into the spot and it moved up here, you'd make 0.4% of $1,000. That'd be like $40. Now, that might be an insanely high number. Like you'd have to do proper math to figure it out, but that's effectively it. So every time it sells, you're making a little bit of cash. When price comes back down, it buys your coin back, but you still have that cash. And the reason why I wanted to explain that was, okay, so with this was on Thursday. This was an example of I don't know which way Bitcoin's going to go, right? Like, so this was on the 13th. So I think this was Thursday. Let's switch over to, all right, so it was here-ish, all right? So at this point in time, we weren't sure if Bitcoin was going to drop down. We weren't sure if Bitcoin was going to go up. Now, this is an example of I already have Bitcoin. Now, I'm afraid if price is going to continue going up, I don't want to sell all my Bitcoin now and risk not making any money. Like I don't want to sell at 30,000, suddenly have it go to 34,000 on me, because then I'm going to feel like a chump. But what happens if it also starts dropping down? I don't want to sell my Bitcoin here, have it drop down, then suddenly spike up or whatever. So we didn't know what was going to happen. I was perfectly fine if I held my position. I'd already taken some profit, and now I just wanted to see if I could improve my profits. So all I did is I set up a grid bot, basically saying, let's go into the page here. So I said I had 1 Bitcoin, okay? And I set a floor of 30,200, and price I think at that time was like 30,350, 380, something like that. But I basically said I want to take that Bitcoin and I want to set sell orders that lead all the way up to $40,000. And so what would happen in this situation, I had no USDT in it, but when price would start going up, it'd be selling ports in my position. Like, so you can see here, hey, look, you know, I sold $531 worth of Bitcoin. I had a 1.74 P&L. And then price started going back down and it bought back in. So now, basically what happened is we saw that particular day, the price spiked up a little, then it came back down, and then it just went down further. So in this situation, obviously price has not gone up. So I haven't made a lot of money in this, but I haven't lost anything because I still have my 1 Bitcoin. So if you look at this though, I have the 1 Bitcoin, but this is what I currently have altogether. I have my 1 BTC still. It bought my position back, but I've also made $34.50 when it sold on those slight little peaks before the price started reversing. So now I'm actually up $34.40 since when I started the thing. Now I know the P&L here shows minus $890. That's just because it's basing it on when I opened this. Like I opened this up at 30,395. So it's just taking, well, the fact Bitcoin right now is at like 29.2, that this is how much technically I've devalued. But I still have that 1 Bitcoin. So this number is actually moot because I haven't actually lost any money. My Bitcoin has devalued. But if I'd just been holding on to that Bitcoin because I wasn't going to sell it at 30,000 anyways, because I wanted to see if it'd get to 32, 34 before I was going to sell more, I'd still have that 1 Bitcoin. I haven't actually lost, like if I close this bot off right now, I would still have 1 Bitcoin and I'd still have my $34.40 in profit. So the reason why something like this is good is because of the fact we've been having a ridiculous amount of consolidation. We have like really strong moves, like the previous. Well, this is that might be a little higher than what's actually going on in the markets, but like we've had, Monday of last week, we had a really strong move upwards. And then we had a pullback, then we had another move up, then we had another pullback. And all of this volatility, I would have been making money on if I had a grid running down here, which actually is another one of the grids I have in these examples, which I'll show in a couple minutes. But the thing is that because what winds up happening is we wind up having these strong moves, and then we just dick around for days. Like, I mean, you look at when we had our move up from like 22,000 and we got all the way up to 28. We ranged for, what was that? 23 days. 23 days, we just basically dicked around this range before we had another move up. And during all that time, if you were just holding your Bitcoin, waiting to see, well, what if it gets to 30 or 32, you're not making any money on that. So in this case, if I had a grid running, it would have been making money in all the ups and all the downs. It would have sold a little bit of my position. But if I had it set that I want to be selling all the way up to, say, 40K, it's going to be such minuscule amounts, but it's still making me cash. And then if I'm wrong and price actually nosedives back down, well, then I haven't lost my original BTC. And if price does something like this, where it goes up for a little while and then it comes right back down, I DCA buy my entire position back in, and I've made money in all this volatility along the way. So this is one of those examples that why using something simple like this with our knowledge of technical analysis and our ability to kind of monitor and pay attention to the markets, why this is going to be way, way more beneficial for us. Because this brings us to another thing a lot of us have liked, and one of the reasons why we got into time and why we got into Ohm and all the DAOs and all the nodes and all that shit last year, where most of us lost money on, but it was cash flow. That's what we wanted. But this not only allows us to preserve our capital, but it also gives us access to cash flow. And I can demonstrate that, for example, with this Litecoin one that I did. So Litecoin was set up on Tuesday, and it's been one of the better grid bots. So I set it up at $91.98, and since then, price has gone up a fair amount. Like, we're almost at the top of my grid. But in all of this, it has made $23.56 on a $120 buy-in. So when I started, it put in like $60 into Litecoin, and it kept the other $60 to buy in if it had to DCA down. So far, I've made $23.56. I still have a pretty large amount of Litecoin. And, but this money that's here, I can actually pull that out. So my initial $120 investment is still in there. So even if I pull these funds out right now, my bot doesn't stop doing its thing. It still has the same amount of money that it started in. It still has the ability to keep working within that volatility and making the same money at the same rate as it is right now. But when you're talking, okay, so the P&L at $23.56 over, we're going to do some more math here. So it's been, what, 5 days? I started this on the 4 days, almost 5 days. So we go 23.56 divided by 5. That's $4.71 on average a day Litecoin is making me in cash. That is irrelevant to my actual investment. So if we go 120 divided by, 4.712 divided by 120, that's almost a 4%. Is that right? 4%? Yeah, I guess that's right. If we're talking 21% P&L, that's almost a 4% daily return. Now, this is an oddball result. normally you would expect a good grid bot will normally do somewhere between 0.5 to 1% of daily income for you if you do it right. But that's cash flow on top of the actual investment itself. And you can pull those funds at any given point in time without it affecting the trade. And this just gives us the ability to have cash flow in stuff that, say, we're wanting to invest in anyways. So there's so many of us who are talking about investing in DOT and investing in Matic and investing in ETH and just Bitcoin itself and stuff. And you can run these to be able to do that and still make cash at the same time. So I will go into this in greater detail on Wednesday, but this is just like a simple example of how algorithmic trading at a very basic level can work really well for you guys. Because I mean, in this situation that I'm talking about here, like with this last bot that I did, let's say Bitcoin hadn't started decreasing. Like we know it spiked down, or not really spiked, but it started moving downwards. Let's say it went in the other direction and it started going up to 34, 35, 36K. I'd be slowly selling off that one Bitcoin I have. It'd be basically like reverse DCAing and be selling little bits here and there consistently. So I'm taking profits the entire time. And then if Bitcoin suddenly crashes, it'll buy back in, but I've still made cash. And I don't have to monitor this. I don't have to, I don't have to change anything. All I have to do is basically, collect my earnings every once in a while. And occasionally, I might stop a grid prematurely if I feel that the winds of the market are changing and maybe it's a good idea to just actually completely close it out in profit and, wait for the next opportunity. So we'll be discussing that in greater detail on Wednesday. This is another example that I have here. Like Adam, I did the same thing. This was a couple days even before the Litecoin one. This one has made $75, but this is on $1,000 investment. So this is more realistic as far as earnings go, so it has made, about a 9% in a 5.5 day period. So you're talking 1 or 2% a day. This is still a little high, but we had that big boost mid last week, which, pumped everything. So that's kind of giving it a little bit of a benefit. But that's now $75 I could put into another trade. That's $75 I could just take out to reduce my risk. I could cash this entire thing out, just walk away with a 0.9% return, basically. So there's a lot of options there. This was my Bitcoin one I started when price was at about 28,000, I believe. 28,319. And obviously we've had a couple push-ups since. But yeah, this has made money as well. Now Bitcoin, because of just like when I go into explaining how to properly configure your grid bots, Bitcoin is a lot harder to make money on. When you're talking something that is high cost and it's slow moving, it doesn't earn as much as, say, a shitcoin, but you have the benefit of lesser risk because there's less chance, even on a bad day, Bitcoin maybe drops 10%. We've had bigger days, obviously, but I'm talking on average. If you have a really bad BTC day, like an FTX crash, for example, 10%. So whereas you could have, something like, let's say you had Uniswap and Uniswap gets hacked and they lose like 80% of their funds or something like that. And their coin just nosedives, or a Luna situation and stuff. The money can just disappear like that. So you have to kind of move between safety and profits. So there's a whole portfolio management system to this as well that I'll be talking about. Those are all the sorts of things. But this is what I'm going to be getting you guys all to be informed about, and hopefully I can teach you guys how to really with very little effort, be able to really improve your game in this really ridiculous market, just simply because of the fact we have so much consolidation, we have so much uncertainty, and this allows you that when you're like, well, I want to start taking some profit, now you have a way to take profit without assuming any risk. And you can also do it, and with it set up like this, it works while you sleep. So you don't have to worry about happening to be in bed and halfway through the Asian market, it spikes up to where you would have wanted to take profit, but then you missed out on the opportunity or whatever, similar to that. This also works great for DCAing. So this Bitcoin one that I had started a week ago, the whole point of this was to try to explain to you guys one way, because of the fact this was actually for Tom, but this was basically one of those ways where it was like, well, we don't know if Bitcoin's going to drop. We don't know if Bitcoin's going to keep skyrocketing. So what the fuck do we do? And there's a lot of uncertainty about joining into the market. So this is actually a really wide, well, maybe not really wide, but it was a wider grid. So I had got in at 28,000, but its low range was 20,500. That means, and its top was 34,000. So basically one of two things was going to happen. If Bitcoin was going to continue to keep going up, whatever position it had purchased when I started this at 28,000, when we hit 34,000, the grid bot would end, and I'd walk away probably with like a 15-20% profit. Whatever. It'd be like 20,319, whatever the percentage of that between 34,000 is, divided by about, 20. Something like that. In any case, or not 20, like by 1/5. In any case, but if, let's say, Bitcoin went in the other direction, let's say it actually did collapse. Like maybe the GDP announcement this month really wrecks the economy in the US and Bitcoin drops down to 21,000. Well, it's DCAing all the way down. So it's just basically buying small amounts of Bitcoin at every single level. And if it stops at 22,000 and starts going back up, well, now you've DCA'd in and your average price might be 24,000. And now you're making money on the way back up. If it goes all the way down to 20, then you've DCA'd in more, and maybe your top price or your average buy-in is 22,000, which still probably beats the hell of what you would want to do right now. If you're like, well, what if I don't want to buy in at 28,000 and have Bitcoin drop to 20,000 because I'm going to feel like an idiot. This stops you from feeling like an idiot, but it also makes you money along the way. And if you happen to be wrong, like some people very well could be, where they just sit on the sidelines for months because they're expecting the market to go down and it's done nothing but go up. I, having had been one of those people as well, this solves that issue. Sure, you're not going to get as great of a position as if you waited until it hit the very bottom and then bought in there, but this gives you comfort in knowing that no matter which way the direction goes, you're going to make money. You either are getting your DCA in at a lower level in case the markets do go down, so you're still getting what you wanted there, and if the markets go up, you're still making money from that too. So, Jeff, do you got any questions about that? Because I think it's still just you and me today, bud. So if you have any questions about how this all works, now's your chance to ask. Otherwise, then when I do it next Wednesday, I'm going to give you guys a full walkthrough of how all this is done. Okay, so I think that might cover it for now. I don't really have anything else to say at this moment in time. I think we've covered everything for this week. All in all, it was a very boring BTC week. So we'll call it for now, and I'll be chatting on the Discord and stuff like that. Thanks so much, everyone, for hanging out with me, and I will talk to you all soon. You guys have a wonderful, magical day. Goodbye.